I just wanna chill and twist the lie, catch stunts in my 745. You drive me crazy, shorty. I need to see you and feel you next to me. I provide everything you need, and I like your smile. I don't wanna see you cry. Got some questions that I gotta ask, and I hope you can come up with the answers, babe. Girl, hey, it's easy to love me now. Hey, would you love me if I was down and out? Would you still have love for me? Girl, it's easy to love me now. Now, would you love me if I was down and out? Would you still have love for me? If I fell off tomorrow, would you still love me? If I didn't smell so good, would you still hug me? If I got locked up and sentenced to a quarter century, could I count on you to be there to support me mentally? If I went back to a hoopty from a Benz, would you poof and disappear like some of my friends? If I was hit and I was hurt, would you be by my side? If it was time to put in work, would you be down to ride? I get out and peel a brother cap, chill and drive. I'm asking questions to find out how you feel inside. If I ain't rap cause I flip burgers at Burger King, would you be ashamed to tell your friends you're feeling me? In the bed, if I use my tongue, would you like that? If I wrote you a love letter, would you write back? Now we could have a little drink, you know, a nightcap, and we could go do what you like. I know you like that. Girl, it's easy to love me now. Oh, now, would you love me if I was down and out? Would you still have love for me? Girl, it's easy to love me now. Woo. Would you love me if I was down and out? Would you still have love for me? Now would you leave me if your father found out I was thugging? Do you believe me when I tell you you the one I'm loving? Are you mad cause I'm asking you 21 questions? Are you my soulmate? Cause if so, girl, you a blessing. Do you trust me enough to tell me your dreams? I'm staring at you trying to figure how you got in them jeans. If I was down, would you say things to make me smile? I'll treat you how you wanna be treated, just teach me how. If I was with some other chick and someone happened to see, and when you asked me about it, I said it wasn't me, would you believe me or up and leave me? How deep is our bond if that's all it takes for you to be gone? We only humans, girl, we make mistakes to make. To make it up, I'll do whatever it takes. I love you like a fat kid love cake. You know my style, I say anything to make you smile. Girl, hey, it's easy to love me now. Oh no, would you love me if I was down and out? Would you still have love for me? Girl, it's easy to love me now. Oh, would you love me if I was down and out? Would you still have love for me, girl? Could you love me in a Bentley? Could you love me on a bus? I'll ask 21 questions, and they all about us. Could you love me in a Bentley? Could you love me on a bus? I'll ask
Okay, I'm here. Had to get my coffee. Yeah. Okay. Okay. All right, where are we at? Okay. Saving the market. Here we go. Oop, wrong one. All right. Good morning, everybody. Got this whole new setup on my stream. I wonder if Twitter is actually streaming right now. Am I live on Twitter or on X? I've been trying to figure that out. No, it doesn't look like I'm live. Huh, weird. Can't figure out going live on X. I just can't do it. I don't know what the deal is. I had some sort of setting wrong. Tried. Failed again. Okay. Good morning. What's up, Barkster? Varma. Gravity. Remy. Save us. What's up, Price? Emerald. How's everyone doing? I know it's been crazy, right? We had 2 down days. It's crazy. Hey, Rob. Rob's always showing love. He's been doing for years now. I always remember Rob's photo. Hope you're doing good, man. All right, we're going to take a look at the markets here. Check, 1, 2. Make sure my audio's all working. Sounds like it is. Looks like it is. Okay. I have so many screens. Okay. What's up, generator? What's up, Sham? Big. TOT looks interesting. Is Q's going to bounce? Yeah, probably. I would imagine so. Well, we're going to take a look to see exactly just how powerful of a move this actually is. So I have Q's on the screen right now. Okay. I have Q's on the screen right now. I'm going to see if I can get my Twitch to view my chat better here, man. This is just okay, that's a little bit nicer. Okay. Oh, cool. Now I can see both chats from YouTube and Twitch. Cool. Love it. Okay. From Sacramento? Cool. Hey, what's up? We're in the same area. Well, I'm outskirts of the city, but all 9 of us on Twitch. Yeah, exactly. All right, let's save the market. Here we go. That's why I hopped in right now, because I'm ready to save the market. All right, so first off, I wanted to point out a couple of things here, because the market is moving within expectations to an extent over here from a monthly perspective. Okay, so this right here is the chart of the Qs. It's on the daily time frame. The reason why I'm starting on this one specifically is because I shared this on a prior brief, September, October, and then the month of November. And we've had some sell side in November to where? To right there at the lower expectation of the month. This is what the market priced in for the entire month. And we're down there. Now remember, we're typically in a more bullish seasonal period, which seasonality hasn't really mattered. And a lot of the times it really doesn't matter, but it's always good to know certain pivot points in seasonality and stuff, just to keep on the radar. Creating trades around it, I wouldn't put too much weight on something like that, but it is known to be more bullish. So right now, what we're seeing quite a bit of sell side, and what happens here as the market's been basically going straight up, the bear voices, have been getting louder on a few down days, right? And overall, what systematically is broken here? Nothing, right? Nothing. It's pulling back. It should be pulling back. It should be consolidating. We still see higher highs, higher lows in the NASDAQ, in the SPY, and so forth. So it is still very much a risk on. We're just now starting to see market conditions change a little bit. Okay, so when I go into the market conditions chart that I like to use over here, this is SPX on the 2-hour time frame. This gamma flip line over here, it's hard to see because there's a 1 DTE option there. But the gamma flip line, when you're under it, this is what you see. People start to freak out when you're under the gamma flip line, but they don't really understand why. And that's because, once again, dealers will sell into the selling, they'll buy into buying. You'll get more volatile moves. You'll get stronger moves to the downside, stronger moves to the upside. So look at, I mean, this is what it looks like. It just kept going and going and going and going, freaking people out. Kept on going, and freaking out. When you're in a turning change in environment, you're going to also see, if it starts moving up, people are going to start getting super excited super fast. That's just how it is, right? That's how these markets work. They'll suck people back in, then they'll try to take another leg. The way to be most cautious in this environment is when you're in negative gamma. Okay, when you're under this flip line, if your strategy doesn't adapt and change, right? If you're still, buying the dips, if you're still, playing breakouts, you got to understand the conditions of the market are changing, and you got to understand what your strategy is and what environment works best in. So for me, when we're in positive gamma, when we're above the gamma flip line, when we're in positive trend, I like trading breakouts, right? I like doing breakout trading. I like things that get tight and then play the breakout. But when we're in negative gamma, you get a lot more fake outs, right? For swing traders, right? It'll break out and then come back in, and then it'll fly back up, or it'll, boom, it'll keep going. And then you're like, capitulate, get out, and then it flies right back up. That's what negative gamma does, right? And don't get me wrong, it can happen in positive too, right? It's all based off the individual equity, but it tends to happen more when you're in negative gamma. So what I do typically here in more negative gamma is I'm a little bit, as far as swing trading goes, I look for fade trade. So I look for strong moves to the downside, and then I'll try to play a bounce. Like, that's one of the ways I do it. Now, because we're in negative gamma and because we're seeing more volatility, because that's what happens when you're in negative gamma, volatility goes up. Let me share this chart with you. Okay. Okay, this is what it looks like when you're in negative gamma. Let me activate this. Okay, these gray shaded boxes on my screen is when you flipped into negative gamma. So we fell under the gamma flip line, volatility started to rise, then it came off, we got out of it, right? Volatility came up, right over here, followed between gamma. So imagine understanding this before it happens. So day one of falling in under the flip line, you can technically start to protect yourself from potential of seeing big spikes like this. Okay, and that's how you can really, just by looking at this is the chart of the VIX, which the VIX is. I'm not going to dive too much into the VIX, but just so people know, the VIX is not a tradable product. Right? The VIX itself is not a tradable product. It's an options. It's a equation. And I know people will go in here, but you can trade on the options chain. Okay. But still, this is not actually, you're not trading technically the VIX. You're trading VIX volatility futures. They're based off the volatility futures. So many times you always want to check. And also, same with things like UVXY. Now I'm getting on a, I said I wasn't going to do this, but so UVXY, I don't know. Is it not VVIX? VVX? What is it? Yeah. No, I can't remember. VXX? I can't remember. Whatever the volatility products are, they're based off of volatility futures. Okay. I don't know why I did that. Went off topic, but I marked up this chart just so you can see kind of what it looks like. And as you can see, if I zoom in here, we've been under the gamma flip line, and guess what? Selling but gets selling, buying but gets buying, volatility upticked. Okay. It's quite normal stuff. So now we got to start paying attention to where the market could potentially go to. Okay. And that's why I pulled up Qs as the first chart, is because take a look. We tagged into the lower weekly implied move. I turned on the stream to save the market basically when we were down there at the lower. And what are we doing? We're starting to see the market retrace back a little bit here. Doesn't mean that we found the bottom's in, doesn't mean any of that, but we're starting to recover. This is what the market priced in, and now it's kind of settling itself in. Now, if we look at it from a daily perspective, right, we're back in the daily expected range. We're outside of the weekly expected move, which if I look at this in terms of this entire quarter here, we've had one significant breach this quarter, and every week, this quarter, let me see. Yeah, okay, so the quarter was right here. The quarter started here. We tagged it, This was the breach, and this happened to be when vol control funds were exhaustingly high, and same with CTAs. So when we had a negative gamma hit, which we did here, you saw a fast move to the downside, right? That it makes sense. And we're seeing the same thing happen right here. Okay, then we tagged, and now we're breaching again. So, if we close outside of it, which, I mean, it's 920, chances are we probably can, that'd be a pretty big recovery. That would be just another breach of expected move. Okay, so that's one breach. Let me pull up the expected move for the month on the SPX and take a look here. This green kind of zone, if you remember watching this market brief, right? This is the expected move for the month of November, the lower portion. All right. So if we're moving into a more bullish period in time, okay, the market's selling off. This legitimately could just be a shakeout before some sort of a rally. Now, from just a price action perspective, right? If I just look at, I'll bring up the SPY from a price action perspective. I mean, things have been getting shaky here for a while, right? And you can see this could be some sort of advanced head and shoulders pattern people will probably start talking about in the near future if it does something like this, right? They'll be like, it's a head and shoulder pattern, and then it's going to crack and go to lows. And they may be right? They may be wrong. We've been talking about on the market brief how, you're getting all these signals, right? That Hindenburg-Omen signals you're getting, and those are clustering, which they've mattered in the past when you start to see clusters. So you might as well bring it up, right? We're starting to see various divergences within breadth or divergences in with sectors like the housing market. Look at the housing market. This thing has been just a straight line down. It's getting actually pretty tight. This probably got to see some sort of relief soon. Or just actually a substantial breakdown, because this has just been a slow drag, slow bleed down, slow bleed. I mean, so yeah, 1, 2, 3 legs down. Maybe we get some sort of pop back up to 700 here in the housing market or housing index. Ay, caramba. They're both VXX, not leveraged, UVXY leveraged, sorry, I'm just watching all this now. You guys, I'm seeing the responses of what SVIX. Okay, yeah, all those volatility products, they're based off of volatility futures, right? Right. So if I go to VX, right, volatility futures, this is volatility futures. You can go into product depth, and you can look at all the contracts. You can see the Decembers, the Januaries, the Februaries, the March, and so forth. And what is this telling us right now, right? For me, this is nothing. This is nothing to be scared of right now, right? If it looked like this, boom, then I'd be like, yeah, we got problems. And the chances of going into backwardation are always higher when you're under the gamma flip line because of volatility typically increases. So, but we're not there yet. We don't see backwardation yet, right? At the moment. Yeah, volatility is high. It's at 20%, right? I guess higher than what it's been. But then you look out a month and it's at 21 and so forth, right? So this is just a normal curve for volatility futures. Okay, and the analogy that I use is simple. Like, you're training for a marathon. You know that in the future the marathon's going to be hard, right? So you're saying in terms of volatility, yeah, we got more fear in the future, right? Or fear, or we see more volatility in the future. That's totally normal. But if you're about to, hit the start line on the marathon, you know that it's going to be a difficult race. And if you look outwards, months down the road, you're like, it's not going to be as hard, right? It's not going to be hard because you're doing all the workout now. It's going to be a big run, big race. It's going to tax your body. And when you're done, you're going to be able to relax and chill. Okay. So yeah, the marathon's in the future. At least right now, right? I've been looking at back month versus front month volatility. That chart's been coming off. I don't have it in front of me right now. I don't know how I could pull it up. But all this in theory just tells me that we're getting some relief in the big names that have been just monster runs, right? Monsters. Let's take a look at some of them, all right? NVIDIA, right? Coming off from its highs, 212 to 182, right? It's just been kind of a straight line down. Do you think this is just not going to bounce again? Of course it's going to bounce again. You do have earnings right around the corner, okay? So NVIDIA is one of them. Let me bring my sidebar back up. Apple, I mean, that's just going. If we're actually going to get some real sell side activity in these markets, I would imagine Apple would come off, and it just hasn't. It's just kind of going sideways. So if there is something bigger brewing under the surface, Apple would come off. It's just, you're not going to get a huge market sell off if Apple just keeps going up higher. Microsoft, like look at this move in Microsoft. This to me looks like, this is okay. So once again, when we're in negative gamma, I look for strong moves to the downside to potentially fade. This looks like a fading opportunity. We're literally pulling into where we saw prior level that we bounced from. We're pulling into this, dude. Yeah. Like, I don't know if it's going to go all the way up here, but if you create a small little trade, right, you don't go heavy because you're buying into weakness here, technically in the shorter time frame. But if you bounce right back up here, you're looking at, 4%, or less, $12 per share, 2.5%. You're going to see a relief in these names. What that looks like, I don't know. Perhaps we break down from this, shake people out, and then go for a U-turn. Okay, maybe we don't. Who knows? But the reality is, if you start small after a strong move like this in negative gamma, these can create some pretty decent setups. Google needs to take a rest. All right, this thing has been crazy. Amazon, huge move on Amazon, and now a big bullish earnings move. Right, follow through, coming in. That's fine. Right, so I would say, maybe a gap fill, but also pay attention to kind of just around in these areas over here. Like, this is going to create opportunities. Like, this is not bearish at all. Not yet, right? AVGO, breakout coming back in. Not my favorite looking setup. Meta had a pretty bad reaction to earnings. These are going to see also some relief, but stepping in front of this, dangerous. Dangerous to step in front of Meta. It's not looking nearly as good as some of the other charts that I kind of just mentioned there. So when you approach these things, if you're trying to play for like a shorter term bounce, you can go into the smaller time frames, say, oh, you see a positive divergence on the RSI or on the price momentum oscillator, MACD, whatever you use, and then maybe wait for it to get back above the 5-day moving average. And if not, right, back above the 5-day moving average and have that start to incline. If not, you got to start very small because you don't want to like shoot too hard too fast, and then all of a sudden it comes off a little bit more and you get out and then it rips. So you got to do like incremental, like little tags. And if you don't go individual stocks, you can always look into something like the Qs, right? Or the MAGs, right? If you want to be even more focused, right? The MAGs, this is the MAG 7. I mean, look at this. I mean, I don't know. It doesn't look bearish to me. It looks like it's pulling in. It needs to pull in. It needs to relax. It needs to rest. Look at Tesla. Tesla came in a little bit here. This is a stone's throw away from new highs, right? Consolidating. It does this a lot of the times. I've noticed this with Tesla. You get these shakeouts before some decent moves, but right now it's kind of just consolidating right within here, and we're a stone's throw away from a new high. Oh, I got to drink some of my coffee. I've been talking too much. All right, let's see how everyone's doing. Get the rocket ship out. Yeah, let's take a look at the Qs. See here. What do we got going on? Are we recovering? Timed perfectly. All right, I'll get in the rocket ship. Sure, why not? Nah, but this is gonna jinx it. All right, we'll stay in the rocket ship. We'll get a lot of screenshots by other people. This guy was in a rocket ship when the market was down 2%. Ay. Been out loud with 2 sigma vol alerts. Do you like the daily or weekly better? Yeah, I have been, but I've been trying to make the alerts work better. So because we keep on running into errors, and when we're trying to upload like changes to the code, there's something to do with like the WebSockets and the APIs. We needed 2 APIs, and it's just a lot of money and a lot of time. So hopefully the alerts are working good for everybody. It depends. If I'm day trading, I'll look at the daily, right? The weeklies are great alerts, especially if you start to see some big moves. And then the monthly, I haven't really got too much into the monthly yet, but it just notifies you that saying, oh, if I look at the monthly alerts, right, it's like, oh, wow, these have moved pretty substantially. Like, so for example, the last alert in the monthly time frame was on one called DOCN and it says it hit the upper monthly implied move. So I'll go to DOCN. I'm like, holy cow. Yep, it did, right? But then, oh, it's because of earnings, right? Earnings is what drove it up, right? So a lot of the times, you know, I don't necessarily want to step in front of a freight train, right? A lot of these 2 standard deviation moves, right, might be happening because of earnings or potentially a news catalyst. So I like it when that's not involved, and maybe it's just part of the flow for the day, right? So daily implied move, like we got a 2 standard deviation move in Morgan Stanley today. So I'll pull up Morgan Stanley, right? Morgan Stanley, I go over here. We'll look at the 2 standard deviation move, which had triggered at 158.16, 158. Holy moly. Jeez. Right, so I like the bigger name. That's crazy. So this was a 2 standard deviation tag that came in right on time. And, you know, it creates opportunities, right? So especially on days like today, I didn't catch this one. I was busy. Could there be a separate channel for separate channel for index. Oh, index, weekly, daily. I don't know. On the index products, it's like those ones are important. So it's like those should be on your charts anyway. So I typically mark those manually. Having another channel set up for just a few index products, I don't know. Maybe it would be cool. I'll give it some thought. I just know that that's going to, just to develop, like it's not as easy as just like 1, 2, 3, here you go. Those alerts go there. It's like it requires more code, more settings, more money. It's not cheap by any means to do all this development work for this Asher bot. Okay, let's go back over to the S&P 500. It's just trading where its daily implied move is. Underneath the daily VWAP, let's go over to the Qs. I want to go check them out again. And we'll take a look at like IWM and some of the stuff. And we'll look at some individual stocks too. So yeah, we're getting a little relief here. No surprise, right? This could be just a suck and rally. Who knows? But look how fried we got, right? So if you look at the RSI, right, we got pretty oversold here, right into a monthly implied move. You're going to see relief. You're going to see bounces, right? It is what it is. Now, if I bring you over to the trend changer, right? If you want to be like we were talking about, hey, this is where you want to be cautious. This is saying, okay, now you got to let the market prove itself. All right. So if you wanted to try to take stabs, we talk about this often, stabs, thinking that you're right versus being, if you're trying to prove to the market that you're right before the market actually proves itself, right? You got to make sure that that's considered in your sizing and your positioning in the markets, right? Because so far the market's been right. It's told us basically watch out over here or watch out over here, and it's been just putting in lower highs, shorter time frame, right? This is a 30-minute time frame, 5-day declining moving average. It's synthesized 5-day moving average, right? For those that don't know, the 5-day moving average on a 30-minute time frame is 65, I believe. 65, yeah. Okay, so all of these are declining. That's semiconductors over here. Yeah, is it frothy? Yeah. So we're probably going to see a little bit of relief. SPY, is it frothy? Is it pretty extended from the 5-day moving average? Yeah, right? When it gets extended, you see bounces. But you ultimately want to see this thing start to flatten out and turn back up, and then start to look for things like this, where it gives you better opportunities, where then you're trading with the shorter term trend actually changing. All right. NQ today. This is NQ. It just broke outside of its opening range. Never revisited it. Not once. This thing has just been heading lower. Oh, I forgot that I'm in the rocket ship right now. I got to turn that off because it blocks some of my screen. Okay, give me a second here. Let me see if I can lower this so I can see more of my chat. Okay. Man. That's good. Okay, we'll look at some of the individual names. We'll take a look at some of the sectors too. Might as well peep what's going on there. I see somebody mentioning TEM. That's a volatile name. That's been coming off a bit. Predictions for end of day QQQs. I don't really have any. I have no idea. Yeah, I don't know. Let's take a look here. See if anything's changing. All right, market net flow. The green line's going up, which definitely helped with this little rise up. But now we're starting to see the cumulative puts also kind of rise. We lost convergence, and when you lose convergence on a bearish divergence, that's you typically see market relief. And we're at that lower gamma range here at 663 for the SPY. 666 and 660. So 666 on SPY. So perhaps if we start getting some more relief, we'd have to get back above daily VWAP, but it'd be coming back up there. But there's also kind of quite a bit of pressure at 660, and we're $3 below. That'd be a pretty big hit there. And that would bring us much closer to the lower implied move for the month, which I think that's the monthly lower implied move. I think I updated it. Do I see SPY at 700? I don't know about SPY. I was looking at SPX, which, that's fairly the same levels typically, right? So I think that it's still, I think that's still a strong possibility to see 7,000. I mean, we're right here, right? Can you imagine if we go through a 20% like bear market and getting this close to 7,000 and not tagging it? I have a hard time believing that. But right? If price doesn't prove itself, then it doesn't prove itself. So what do we got to wait for? Well, we got to wait for opportunities to either scale in at certain levels, and or wait for the market to prove itself on a smaller time frame, and hopefully that turns into something bigger, right? And that's why we look at the direction of that 5-day moving average. Yep, Q's hit its monthly move today. We've been sharing that. It was right down in here. It's kind of in that zone right now. With the zone that I drew out was 601.62 to 598. All right, that was we drew that out at the beginning of the month, right there. Yeah, I think that I truly think that these are going to be some opportunities. I think, if you're panicking right now, chances are your position sizes are way too big. But I think that I think it's some pretty good opportunities in the market right now. But just because it's some good opportunities opening up and maybe, giving us some good opportunities into the year end, you can't because when I say that, I feel like people take that as it's gonna go and go get all crazy, right? We still got to look at market conditions. They're not there. It's a different environment right now, right? Being in negative gamma, we're still below a declining 5-day on pretty much all these index products or all these ETS sectors. So the market hasn't proven itself yet. I think that there's going to be an opportunity, but the market still has to prove itself, which I'd rather buy, higher or scale smaller. I I'd rather scale smaller and take little haircuts, as the market's going against my bias of where I think it can go. Or I'd rather just wait for the market to prove itself, and then I can go heavier, because then I'll know, when I'm right and when I'm wrong. Don't be a panicking. Snow and crowd looks strong. Roblox. I will pull those up. Keep dumping until shutdown gets resolved. Yeah, there's a possibility on all of that. Like for example, right? We have the tariff stuff going on right now too, right? They just the SCOTUS, or the Supreme Court, just had their oral arguments on November 5th, right? I don't know when we're going to get the resolution from that. But we talked about that on a video, right? So you had VOS selections, right? So tariffs, right, introduced a whole bunch of volatility into the market. And then all of a sudden, as we're coming around here, we had VOS selections and we had learning resources file lawsuits, right, against these, this whole tariff stuff. And then the CIT panel granted summary judgment for the plaintiffs. And from this, it's just interesting to me because after these lawsuits came into play, then you get this, like, what did the market do? The market kind of just went higher. So the market is like saying, if the market thought over here that tariffs are bad, and then over here they're like, oh, they're going to shut these tariff things down, the market ran higher. So I don't know. I'm trying to think through it, and I keep on coming to the conclusion that if Trump wins these tariff things, I don't think that the market's going to love that. Right? If he actually wins. Now, if they shut him down, the market. This is why it's so interesting to me. So if they shut it down, that means the market would like that. But did the market already price that in? Because the market's a discounting mechanism. So then it's like, so you got to just watch order flow. And I don't know when we're going to get a resolution to that. But I looked around, and it's like you can have it because it was an expedited process. You can have it early next year. You could potentially have it this year. Narratives. That's why I don't like narratives. About options flow, more recently, there were more than 100 million in calls on. Sometimes I follow the flows. I'll watch it on some interesting setups, but I just a lot of flow services. It's like you really got to know the ins and outs of them, and like, right. So the other day, let's go to Grab. Like on Grab, going into earnings the day before earnings, there was massive flow going into it, and like targeting like 750 or was it 6? I can't remember exactly. It was targeting up higher a lot, like hundreds of thousands. Like it was monsterish. So we'll see if they're right, but not. You can't. I follow some of it, but I don't get too intricate in it because I still trade the equity side of things, right? I still trade equities, and I still need this proper setup, right? It needs to be, price action has to be tightening. And if I were to just take it based off flow, it's going to be super small position. It's not going to be big, right? And it'll just be to see if it actually gets there, right? I did that with Alaska Airlines, which I'm no longer in, and that thing, it just kept on going. There was massive orders that came in, and all were wrong, right? So, which I can also say that I follow flow on other names. I chose a losing name, but there was ones that I followed, and it was beyond wild, the results. So you're gonna have just mixed results per usual, right? There's no holy grail. So you still comes down to what can you manage, and that's the risk of things. All right, let's look at some of those names that people have mentioned. We got Snow, Crowd, Roblox. So. And we got TEM too. So Snow, Snow's doing good. Pulling back, right? I would prefer to see this tighten up and, right here, after earnings, right? Post earnings, then you get the consolidation, right? So this was probably in the trade ideas. I believe it was actually. And then we get a nice move. Boom, there you go, right? You're risking the breakout, right? This area here, and we broke out, and look at the reward. Bam, if you hold it all the way through. Okay, so Snow looks good. I just would like to see it set up. CrowdStrike. This one was also, this was killer. Like, this is killer. Look at this thing. It was setting up over. So first off, the first trade idea for this one was down here because it was pulling into an interesting area where I saw some prior support, prior some resistance, and some volume. And it happened to play out perfectly. I traded this. And then I saw it consolidating over here, or even right here, I think, too. And I think I honestly just forgot to do anything about it, and I didn't take a position. So I don't have a position. And now we broke out and we're coming back in. We're back testing it. I would like to see this do a little bit more sideways price action. And then, yeah, you're breaking out, you're back testing, right? Remember, one of the principles of technical analysis or markets, right? Strong stocks typically get stronger, weak stocks typically get weaker. And you're seeing, right? If you thought this was the high, it's over, right? We went higher. If you thought this was the high, well, we went higher, right? And yeah, these were some big pullbacks. So that's why I say I like to look for more consolidations. But do you actually think that this is going to be the high in CrowdStrike, right? Forever, right? I doubt it. I doubt it. Do I think that it can come in a little bit more and take some more time to take it out? Yeah, that's also a possibility. Okay. So that's why I look for the setups, right? And right now it's not looking bad, right? We broke out, decent volume too. If I watch what happens when I zoom in. I zoom in, I look at the volume. This is too small. Okay, there we go. Zoom in, look at the volume. So we broke out here, right? Look at the volume. Boom, boom, boom. Much better than the day prior and typically the average. Then nice big move up. What's that look like? Up, good volume. What's this day over here? Right over here. Slightly up, but guess what? Some big volume coming in. So you're seeing these pockets of just strong volume. That's, what you want to see. You don't want to see pockets of weak volume. Like, for example, if I go to the SPY, look at what's been built. Like, look at this, right? You get like distribution type volume. This is a while ago now, so I got to kind of go more recent. But like, okay, so this day right there, red volume bigger than the day prior. The day, this one, red day bigger than the day prior. This day bigger than the day prior, right? This day bigger than the day prior. This day bigger than the day prior. This day, not bigger than the day prior. This day was. This day was. This day was. So these would be considered distribution days, right? And when you start seeing these distributions start to cluster 5, 6, 7 days, that's a sign in of itself. Like, hey, what's going on here? The down days, you're seeing aggressively more volume on the sell side, and then you're seeing small up days. And then what happens? Oh, you end up running into chop. No surprise there. Okay, so Roblox. Roblox. This was, I think, one of the I can't remember. Yeah, I don't love this. I'm a little sketched out on Roblox. Yeah, it really needs to be a decent setup for me to trade. And yeah, I'm just not a fan. Like, for example, right now, yeah, you can probably see some sort of a pull back into and around that 120 area. Like, if you see that, right, it gives people shock. But, this was a very steep trend, and then it broke. And when you break a steep trend like this, you typically go through volatility. So it ended up pressing higher, but then you can see that we ran into a lot of volatility. So if I go to the, over here to the 15-minute time frame, it's still below declining 5-day. It's kind of at that lower value area over here. So yeah, you might see some relief. Boom, 112, 122. So you can create some trades here. But it would have to be, because you're fighting a pretty large, substantial break, and it was an earnings move break, right? So just like a bullish earnings move, where if you get a big move up, what do I wait for? I look for the consolidations and try to play it up. Well, here, right, and I don't like shorting those big moves, right, from an earnings move, but here, right, yeah, you're probably going to get some sort of a pullback, just as if it was a bullish move. Like very, like look at KMB today, right? Earnings move, crashed, boom, cracked, and then now we're seeing a pullback. I think this was a crazy move. I think that there's opportunities in this space. I really do. Some of these big names have just smashed, hammered. A lot of these consumer staple type names. Horrible performance relative to the S&P 500. MU. WTC, STX, NDS. Okay, we'll look at some of those. Yeah, Exotic, you might be right about the rules against Trump might actually dump, like, because the market did price, like, so I really don't know. All I know is that it could be a very, it has the potential to be a big catalyst, right? It has that potential, right? So it's the same thing, like, how can if I knew exactly what the company was going to report on earnings, right? Oh, it's going to be a beat. Like, I know for 100% it's going to be a beat. I don't even know how the market's going to respond to that, right? Like, you don't know. It could be like the best earnings ever, and it could be down. And it's just like this, the Supreme Court, the narrative thing. It's like, I have an idea of what could potentially happen. But even if I had the answer in front of me of what the Supreme Court, if I have a beeline into what they're going to say and what they're going to do, like, I have no idea how the market's going to respond. And chances are, if I get it right, and it goes in that direction, maybe it does that and then, digests it and reverses. It's a dangerous game. And you're playing against, the best of the best in the world, especially when it comes to like fundamental stuff. They've got their models that, and even they get it wrong, right? So Joe Schmo is going to have a hard time competing with, institutional type levels of models and research and so forth. It's the most populated area of analysis. And that's why I prefer just looking at its expected moves. What are they pricing in? That gives a huge advantage of knowing where risk is. So if you're bullish it, and if it comes off, you might be looking a little bit lower. And if it comes off, you might be like, okay, well, this is an opportunity, right? Whatever. There's just so many ways to approach it. Okay, so let me go back up here. Okay, we'll do some of these right here. Oracle. Oracle. Yeah, this thing's been coming off hard. Man. Story of my life. I mean, this thing is this was such a massive run. These would be considered like exhaustion type moves where you get these massive runs, bam, on earnings, and then it just like. So yeah, same thing with these. Right? You're going to see bounces, but we got to see if there's any sort of massive trend break. And if you go to like the weekly time frame, it's still above a rising 30 week and rising 40 week, at least right now. So it got way ahead of itself, and when you get way ahead of yourself, you need to take a break. So that's what it's doing. Now, I don't know what it's going to look like after its consolidation or after a pullback, right? It could just pop up like we saw over here, put in a lower high. Maybe we have to redraw this out. Like, oh no, I don't want to redraw it as a channel. How do I remove the channel? I'm just going to remove the drawing. I'll redraw it. Yeah. Right. So we're coming down. Maybe there's whatever it does. Maybe it comes back up and tries to tag this at some point. Right. That's always a possibility. It's coming into and around these lower areas as it's starting to fill these gaps. So if we get some sort of Santa Claus rally, right, there's that potential. From a shorter time frame, like, right, you have a little bit of a positive divergence here on RSI. Price momentum oscillator, you do have a positive divergence, a little bit lengthy, but it's still not down, still curling, and you're kind of well outside of this whole, point of control and the little value areas. So here, right, if you're thinking of this in terms of kind of the distribution curve, and you're extended from the 5 EMA by quite a bit, actually. So let's see here. Activate this. So this is how far you are currently. When we were this far over here, we bounced. When we were this far, actually we didn't get that quite far, but off of it we bounced, right? When we were this far, we moved up a little bit. Over here, right, we were that far away from it, we moved up higher. Over here, that same distance, we moved up a little bit. Over here, it went a little bit steeper, but then we bounced. Over here was its deepest, and then we bounced a little bit there. Okay, so you're kind of at that area where we've seen bounces off, this kind of distance from the 5-day moving average. Because remember, the 5-day moving average, it's the most frequently tagged. Like, you're going to go back for it again. It's going to tag it at some point. When that is, I don't know. Like, right, if we break down, maybe the 5-day moving average is going to tag it right here. Right? I don't know. But being this extended from it, if I were to enter a shot at Oracle, and even if it falls, I still would think that it's coming back up to probably touch that 5-DMA. Right? So when I'm looking at this from an extended point of view, and you'd be fighting the trend, so that means smaller positions, right? And then 2, what that would mean is you got to get out, like, right, when it moves in your favor, or update your stop, because you can, it's right. If I was to go full size, like, I would want this thing way up here, and I want this thing to start turning around, and then to set up better risk over here. I'd feel much more comfortable buying this than like going full size position right now, right? That's just kind of my style. Let's take a look at the market really quick, and we'll look back at some of those names. So did we save the market, people? Did we do it? We stabilized the market. We didn't quite save it, but we stabilized it. I'll take that for now. We'll see. All right, let's look at some of these ones. WDC. That is a monster. I'd be looking for this to consolidate. That thing's been straight up. Holy moly. STX. Yeah, Exotic, you're sending me the ones that are like just insane moves to the upside. Yeah, these things are massive. Would be looking for consolidations in these names. SNDS, SNDK, SanDisk. What is going on here? Holy moly. Look at all that volume coming in here. This almost looks like something you could fade. So notice how like you get these like small little candles and it runs up, right? And then you get a little bit more consolidation. Now we're getting some pretty wide range candles, which could potentially lead to distribution. And then we had a pretty big reversal candle here. Yeah, this looks, so if you're bullish, and today we hit a new high, right? So if you're bullish, is this the best entry for you right here? Probably not, right? It probably will go higher, but from a risk to reward standpoint, where do you put your stop? Right? Like, well, right here. Then your probabilities of getting stopped out like increase from like, 30% to like 90% because you're just so close to it. And then if your stop's down here, it's like you have no setup. So then you really needed to keep continuing this momentum to the upside. That's why I like to look for those consolidations. 5-day moving average above and trending. So, if you get back below it, that opens the door for this thing to start turning around. Just monster moves in some of these names. Okay, let's go to MU. Holy moly. Yeah, all of these things. Look at these things. Yeah, they probably got to take breaths. Like, I'm not going to start new positions and moves that went completely vertical, right? This was a good setup, right? These were little pullbacks. These were little pullback consolidations. So you had opportunities. Even this was killer right here. Right, boom. So now it's like, what do you do up here? You can't really do much. Can't really do much. Bull, B-U-L-L. Is that Weeble? That's Weeble. I haven't touched this one. I think I tried to trade it over here, and then it was a quick stop out. I mean, it's straight down, like, right? Yeah. Once again, you'll see bounces and stuff, but are we talking about for a trade? Or are we talking about a swing trade, day trade, an investment? I don't trust this name. Not right now. Like it really does need to set up. And, like I get that there's a lot of selling. You could probably see a bounce, but when it comes to these type of names, like they're smaller companies, like I don't feel as confident as if like I saw the same exact chart with something like Microsoft, right? We talked about Microsoft earlier. So if I pull up Microsoft, it's like, I'm okay with Microsoft pulling down like that, right? And seeing if the thing's set up, right, with Microsoft. But like Weeble, I'm not okay with, right? So I prefer looking at larger companies that are doing, that are potentially that you can fade. So if I was to trade Weeble down here, I mean, what do I do? Right? So that means, first off, there's no risk to reward setup here. It's at new lows. So if I were to do anything, one, I would look at the beta. I'm like, okay, this beta is insane. It's down, 3% today, a little tiny move here on a little candle. This day over here, you can see the potential for this thing to swing 10% plus a day. So maybe at most, I can build this into a 3% position in my portfolio, and I wouldn't start there. I would start there with maybe like 1%. And then my expectations would be that it continues down where I can add another 1%. Right? And that would be pretty much it. And then look for a bounce. And when it bounces, I'd probably just get out. But I can't go like 10% of my portfolio in this name and then just hope and pray that it bounces right here. It just doesn't make sense to me. Let's save Weeble. I mean, Hood did great, right? Hood did great. Do you think it's going to be the next Hood? You never know. You never know. You never know. All right, let's look at SoFi. Yeah, SoFi's been a monster too. Earnings are out of the way. Yesterday, right, it just moved with the market. So be aware that like when you see it move with the market, that means it's right. If the market moves up higher, maybe it benefits that. Watch those correlations. Yeah, this would be once again like if I were to enter down here, right? Yeah, you probably see this thing bounce, but what's the risk? What's the reward? Where's my stop going? So this would be one of those fade trades too. For a swing trading perspective, once again, I need this thing like shape up. So for shorter term bounces and stuff like that, yeah, I get it. Mentioned TEM earlier. It's not loading. Oh, there it goes. TEM. This thing got fried. So earnings broke down. Maybe in and around, let me see here. So there's some pretty decent volume right through these 3 days over here. Actually kind of right within this bucket. Okay, so right within here, this range. So if I were to look at the lower portion of that, that would kind of be right within this area. Right, so for TEM, after a strong move like this, yeah, that you'll probably, once again, you'll see bounces. But if we could get a little bit lower, I don't know if it's going to happen before a bounce. Like I would prefer to go straight down, boom, and come there. I don't want it to go like this and then go like that. Like that, I wouldn't be interested in. But for TEM, after a strong move, like I would prefer to see a little bit lower, kind of in that kind of zone that we just labeled out. And if it does, that could be an area where you can take just a couple, like a stab or two. Once again, it has to be small because you're fighting what the market is actually doing, right? The market's smarter than you. So don't think that you're smarter than the market, even though that it might come off like that sometimes. You're not, right? The market over time will win. So the only thing that you can control is what you manage as far as risk. So once again, if you go against the grain of the market, you gotta think through it, right? And say, okay, if I go against the market, chances are the market's gonna run me over, right? So the way that I don't care if it runs me over is by going smaller in position sizing. And another way to think about it through it is, if you look back at all your trades, you'll probably notice like saying, hey, my entries and timing is not perfect. And when I enter, it typically goes against me. Pretty much 80% of the time it goes against me before it gets better. So what's the point of going all in on a full position right out of the gate? It doesn't make sense. It just doesn't. So start small in these type of things, especially when the beta of this thing is just wild. Yeah, Husker said KO, Coca-Cola had hit a perfect mic setup. I was literally looking at that yesterday, actually. That's funny you mentioned that. I was like, this looks pretty good. So you're not lying. I was looking at it yesterday. Let's see what it did. It's up today. But yeah, that's so funny. You're right. So this is what I like to see. After a bullish earnings move, we saw price consolidate. And yesterday, right, we saw the reversal, and I was like, oh, that looks pretty good. And I kind of forgot about it, right? I went to the gym today, but you had this reversal move on good volume. I was like, yeah, this is after consolidation on bullish earnings. This is the type of setups that I like. You're 100% correct. You know me. If I look at the weekly time frame, we did have a little bullish MACD crossover. And this is still, like, it's not a horrible look, right? We get a little bit of a flush out here in a lot of consumer staple names. But, you know, to come back up here at some point, maybe that's a opportunity. You have a 40-week that's still inclining, and you have a 10-week that's inclining too. So I got a little bit more time left, guys. I'm probably going to have to get off of here at about 30 minutes or so, and then get ready for a call. We'll do Meta. Yeah, Meta. Yeah, Meta. Meta's getting ready. Meta's getting ready for a little bit of relief. Meta needs it. Meta needs a little relief. Help me. Husker, we did look at UVXY and RV and some of the volatility stuff. We were talking about how UVXY is based off of. We did a little bit earlier. I'm not going to get back into that one, but SPY relieving itself a little bit here, coming back up to the daily implied move and retesting the daily VWAP, the daily volume weighted average price, the VWAP. We saved the market, people. Now I just jinxed it. Now it's going to roll back over. Okay. Q's not too far off the daily VWAP. Probably going to try to go for that. Let's take a look at market net flow today. Green line still going up. That's a good sign. You want to see that up. You want to see this red line come off. That'd be more bullish. If you're bearish, that's not what you want to see, I guess. But overall, yeah, you're gonna get bounces. That's normal stuff. The market's gonna have to relieve itself a little bit here. Yeah, PayPal. We'll go to PayPal. PayPal. PayPal's all over the place. I think I tried to take a position in PayPal. I can't remember where. I don't have it now. Let me clear this off. Yeah, PayPal is just, it's a little too crazy for me here. Yeah, I don't know what's going on here, PayPal. Like I can't really do much with this. It's all over the place. So if anything, you would look at this as a range, I guess. Right, and it's pulling back into this big bar over here, which that's kind of the high of the bar. So if anything, right, if you're trying to long it, you know, you go back up to the middle of the range and or try to get to the top, which is around 78-ish. But what do you do? Like if it breaks down, do you just get out? Like it's like literally a millimeter away from breaking down here. So I don't even know where your stop would go. Maybe at the low, like if you're bullish for more of a period of time, that's 14% drop though. So maybe this low, that's still 9%. So maybe you just have to create a risk like of 4 or 5% or something like that, insane. And if it starts moving up higher, then you can move your stop up. I don't know. It's a tough one. Transport's been looking good. I'd have to pull them up. Let's see what trend look like. NASDAQ transportation. It is interesting seeing how the Dow Jones put new highs in, transports didn't. You know, Dow theory is, you know, old school, and it actually mattered more when there was actually, like when the Dow Jones was actually the industrials average, right? Now it's not quite that. Especially like, isn't like Netflix trying to go into the Dow or something like that? It's like, okay, that's interesting. Like, what? What happened to the industrials? Put back in the train stations. I don't even know what's in the Dow. Let's go look. Let's look. Dow Jones. Yeah, like Nvidia and Apple and Microsoft and Amazon. Like it's tech. And you got, a couple other ones. The Dow Jones Industrial Average. Wait, is this the industrial average or no? Dow Jones. I think it is. INDU. Okay. We looked at Hood. Very hidden gem. Very is a hidden gem. Very. We just need it to set up. VRTX, or no, not VRTX. What was it? VTRS. VTRS was looking pretty good. This one, up. Nope. Earnings came out, kind of broke down, so that needs to consolidate more. I want to see Guild really quick. Guild coming off today. Actually, let me go to healthcare now. XLV, because healthcare has been looking pretty good. So, I mean, if I'm looking from a sector basis, healthcare has been looking pretty strong, right? So this is higher lows, kind of matching highs over here. And look at the volume. Like, you're seeing some pretty pockets of good volume. And then today's a down day. So far, it's less volume. I don't know. Maybe we get a little bit of a shakeout and then it sets back up. Or perhaps we do just start breaking out through 146. If you want more juice, you can look at something like Cure. This is like a 3X. Same thing. If you want a more well-controlled fund, PINK. This is obviously shown out relative performance. This is a simplified healthcare ETF. Okay. Go long energy. Let's take a look at oil. I don't know. Some energy names have been setting up quite nice. But if oil breaks down here, there's typically a strong correlation between energy names and oil. And yeah, oil energy's caught a little bit of a bid here. But what's the setup? I guess, if you go long, your stop would be down here, or maybe down here. Try to target back up these higher areas. Possibility, that's for sure. I mean, especially if you need some exposure in another sector. Surely. What happened to Wells Fargo? I want to see that one again. That one came off a little bit. Tech down. Okay. AEO. Let me take a look at AEO. That's the American Eagle, right? Yeah, this looks... Yeah, it does look tight enough. Yeah, this is... Yep. So, yeah, for this, it would be, break above 1735. I mean, man, this thing is super high beta. So pay attention to your sizing in these type of names. This is pretty... You got to make sure that you're okay with, if it breaks out and it comes down, it's 8% or even more. So size your positions accordingly. But yeah, this would kind of fall within that range for sure. It broke a high today, so yeah, stop down here and then see if it breaks out. The probability of getting stopped out right here, though, on a name like this, it could legitimately happen in like 2 seconds, and that's minus 5%. So I might, if my stop was there, I would probably base my risk off of this, though, from down here. Like, I would have to be okay with losing 17% on this name. So my sizing would have to change dramatically, because I can get stopped out in 2 seconds. If my site, I know it's 5% down, right? But it's because of the beta of the stock, it's just too high to really do that. So I might have to look more lower, which means smaller position. And if it breaks out and it goes, right? Real was another one that looked great. This one broke out. This one's coming in. When we looked at it, it was a great breakout. But then now it's coming back in. Okay, Q's recovering. Boeing. Yeah. A lot of the airlines are getting tagged right now. There's, we have the government shutdown. There's some news coming out, and it's just airlines have just not been doing good so far, right? So perhaps there's opportunities here. If you want to not get as volatile in like a specific name, maybe look towards an ETF, right? Like Jets, right? This one doesn't look all too shabby. Okay, so we're actually nearing a period in time where airlines do pretty good. So like, for example, like over here, see November, like it came in. So this last year, November to 14th, and then we rallied, right? I made a video about Boeing a while ago about calling out for a rally. because of the year end. But look we're coming into where? We're coming into an area after a sell-off, like just like last year, right? I know it's seasonality stuff and everyone hems and haws about seasonality, but still, like, if it has a track record of it, you might as well be aware of what price is doing. And we're coming into a pretty bullish area. And if I go back further, no, not that time frame, just go 10 years. Yeah, so over here, this was October, late October to November, bam, rally. That was, 2 years ago. Over here, late October to November, boom, we rallied. What about over here? This was December. So this one fell more in November, and then we rallied. Over here was November, boom, we rallied. Over here, October into mid-October to late. Yeah, no, it came into late November to here. Then it crashed down hard. This one rallied a little bit, but then it came off. So yeah, we're coming into a pretty bullish area, bullish season. Maybe we play it off the same. So I guess what would benefit this is if the government reopens up and they fix all this stuff. Maybe perhaps that's a positive catalyst. I don't know. If I just look at Boeing as it is right now, and we grab this line, we activate it, we move it down, we extend it to the right. Extend yourself to the right. We're actually pulling into kind of this zone, right? Right in about here where we saw prior resistance. And then once resistance was broken, it actually never came back to backtest it. So this would be technically the first backtest if we come down here. So not only would we be backtesting, prior resistance can turn to be potential support, you'd also be coming in on a strong move to the downside and into bullish seasonality. So yeah, that could be some sort of a trade idea, trade setup right there. And once again, focus on risk first, and then create the trade, and then go from there. All right. Did I check Reddit? I didn't check Reddit. Reddit is doing a pretty big reversal today, red to green. Sometimes those can lead to, positive, pops, but, the setup isn't here from like a swing trading perspective. So I'd have to go into smaller charts to see if like anything sets up there where I can trade it, a little bit more aggressively. And by aggressive, I don't mean bigger size, but just like in and out a little bit faster. UNH. All right. I'm coming up on my time here. UNH. This one came right into the gap fill, extend to the left, extend to the right. And this one came off. So, hey, if you miss this move, it's coming back into this area, right? It's coming back into the area where we found prior resistance. And this is the first time actually coming back to test it. So, if you think that UNH has, a place to be in this market and it's going to move higher, these aren't bad areas, right? I don't have a position in UNH anymore. I took off a lot of it before it tagged this. I think it was actually more kind of around this range up in here. But, if I look at this right now, I'm like, oh, that's actually not a bad idea. If I, bullish for the longer period, you're finally getting a pullback from this gap, down 17% from there. BBAI. All right, we'll do that really quick. Boom, BBAI. A lot of these AI names are getting tagged today. You are still seeing kind of higher lows. So you have earnings you have earnings. When is this? Oh, that's like pretty soon. So yeah, I don't know about new setups there, but yeah, you're looking at about $1 expected move on earnings. So see what it does, I guess. I don't like getting into names right before the earnings. I'll stay within earnings as long as I've been in the trade and, I'm up on it. I'll be like, all right, if it makes sense, if I'm okay with losing $1 per share, I'll stay in it. Any thoughts on prop firm trading? Yeah, I'm a fan because I made a crud ton. I paid for my entire backyard from prop firm trading, but I don't know. I'd have to do like live sessions and like some like to kind of walk you through kind of like thought process and stuff while I'm there doing it, because when it comes to that, you can't be in front of your computer all day typically. right? You got to know when your day done is. So you need a plan ahead of time and how many points you're trying to extract from the market and proper risk measures, because a lot of these things they have consistency rules. They have rules layered on upon layered on upon layered on. Some even do like intraday trailing drawdowns. That's BS. I mean, you can find ways to make it work, but that's just horrible. Like, right? If it goes up $100 and comes back down to flat on the position, you're down $100. Like, that's crazy. So yeah, you gotta pick and choose widely. I used Tradeify, and I bought 5 accounts, and I ran those 5 accounts up for a total of 80 grand in payouts. Well, they do. So that was the max sim payout, but then they take a fee from it too. So there's like it's a split. So I actually didn't get $80,000, and then you had to pay taxes on that too. So I can't wait. Hey, what's up, Shanks a Million? Good to see you too. DKNG, yeah, that thing has been just getting slammed, right? Yeah, that's getting a little bit of a reversal here. Oh, did it earnings? Yeah, hey, there you go. Earnings reversal. I would like to see much more volume, but yeah, DKNG got really, really smacked. How do I trade with Asher alerts? I mean, I've only done it a few times so far. It's more of just like it's bringing an alert to my screen here. So, for example, right, Morgan Stanley triggered today a 2 standard deviation move. We talked about that one a little bit earlier. So if I pull up Morgan Stanley, and it's down 1.28% today, and the expected move for Morgan Stanley was 158.16. That's crazy. So this was the alert on Morgan Stanley. Now, I want to be very clear here. This doesn't always, you're not going to have this happen all the time. But for me, what I like to do, I like to look at the daily, the 2 standard deviation moves on some of these names, Morgan Stanley. But if it's a big name, like a Meta or like a Nvidia, I'll pay attention to the daily implied moves too, just the lower 1 standard deviation moves, and get a good glimpse of what the market's kind of doing, and then go from there. But a lot of the times, I think of it in terms of probabilities. If we come out for a 2 standard deviation move and we get under it, there's a high probability that we come back in. But the thing is, there's going to be cases where the market conditions are just horrid, and you're going to break through them, and they're going to just close at the lows of the day. So you need a plan for that. And the thing is, when you're already at a 2 standard deviation move, that means that there's already been a lot of selling that took place, right? So you're buying in at a much lower spot, but it doesn't mean that it can't just keep going against you. So it's not one of those things where you just balls to the wall, forget about risk and everything. You're not going to have this happen every single time. It could have went down, and it could have just floated here all day. I've seen that too. So one thing is, I always look to see, hey, what caused the 2 standard deviation move? Was it earnings? If so, I don't even pay attention to these Asher alerts or Asher queries on earning days. I look into the options chain for that. So I kind of just ignore that, right? If it was earnings. And then also see if it's some sort of news catalyst, something broke, significantly. Now the Asher alerts, they're all based off of the option. So the only alerts that you're going to get are from stocks that have weekly options. That's very, very important to know, because a lot of names do not have weekly options, right? So the names that I thought to be most important are the ones, okay, Asher alerts, or these IVOL ranges. The reason why I went with weekly is because they have higher confidence scores. There's more volume traded on weekly options than elsewhere. So the more volume, the more liquidity that these have, the more confident the confidence score, the better that these expected moves are, right? That's why I pay so much attention to SPX, because SPX is the godfather product, right? It's largest, it's the liquidest, and that's why they matter so much, right? Because there's billions upon billions upon billions, trillions of dollars that create these implied moves. And that's why they're more important, especially when they break from those expected moves. So you're going to get weekly alerts there, and I'll look at, for dailies, I like to look at just the 2 standard deviation moves, see what's going on. Maybe pay attention to the monthly, just notice what's getting tagged the most, right? On from the downside or from the upside, what's showing strength and so forth, okay? So that's kind of just what I do. Looking at Bitcoin. All right, I'll look at Bitcoin. I'm about to hop off here because I have to reset before I hop on a call. Yeah, Bitcoin's showing some strength here. Nice. Yeah, it was pretty big breakdown. Now we're seeing some relief. Let's see what gold is doing. A little bit of a recovery. I want to just take a look at the dollar. That's not the ticker. Dollar bills, y'all. Dollar's coming in a little bit. This is like to a T following it's so funny. It's so funny. The dollar is literally following the path of what it did in 2017 on Trump's first term. The same thing. Has anybody seen that post that I posted on X? Did y'all see that? Or no, it was also in a video, but I posted on X too. Let me show you. Let me see if I can pull it up. Like, this is funny. I mean, let me see. No. Where is it? Come on. I gotta go. There it is. So look at this chart that I put together. So this is 2024, 2025. That's the gold line. And then the blue line is 2017. Well, 2016 to going into 2017. So 26. So they both ran up, right? So in anticipation of Trump being in office or not, right? I don't, maybe it was different. That's just the narrative, but that's what happened. And then you could see them like moving hand in hand. And so when I brought it up, I was like, now we're moving into the area where we typically see the dollar come off, right? Into the new year. And if that's the case, that could be potentially bullish for markets. It's not bullish yet, but that's what the dollar's doing. It's coming in a little bit. We'll see if the dollar is just making higher lows and going to head higher and this thing doesn't matter, or if it is actually going to break down. I want to take a look at yields too. And the 10-year yield, right? We had that little fake out move and then it came in, which shot, bonds up, TLT, to make a nice little run up there. Hasn't really moved much yet. And then oil, right, is a great leading indicator of some of this. And oil has just been a bearish trend. So if oil starts to break up higher, one, that's inflationary. Two, if oil breaks higher and then energy names follow, if energy outperforms the S&P 500, that's not good for the overall market. And it hasn't been good when energy, I'm using XLE as the proxy here, outperforms the S&P 500, meaning that if energy is up 2% on the day, S&P 500 is up 50 basis points. If that happens over time, it hasn't been a good sign for the S&P 500. I don't have that chart in front of me, so I can't share that with you. But all right, let's take a look really quickly before I sign off here. S&P 500 has recovered. Ladies and gentlemen, we came in to save the market, and we came in perfect timing. I'm glad that you all joined me in saving the market, but I think I just am going to be leaving on a jinx, so I hope it doesn't fall back down to lows. We are above the daily volume weighted average price. Price made a nice big move back here. Hopefully everyone had a good stream. When does the dip feel? Because you lost more money than the last dip. I don't know what these. Okay. Responding to somebody else. Chipotle is a dud. Don't use. You don't use book. No, I use Bookmap. Bookmap's right here. Boom. I got Bookmap up. I got Bookmap. I just haven't used it on the stream. I was using it the other day on Tesla to trade it. Actually, yeah. Just so you know, Tesla trade. I was looking at this intraday. I was trading Tesla intraday. Let me show you this. It was crazy, awesome. Tesla chart. No, chart. When was I trading it, people? When was it? Let me see here. Let's do 5 days. I think it was just like a couple of days ago. I think it was this day right here. Yeah, it was this day. Boom. Yeah, so Tesla here, it was below the VWAP, right? And then all of a sudden it started kind of straightening up over here a bit. And I was like, okay, this looks pretty good. Then we broke out. Wait, no, was it this day? I don't know if it was this day. I can't remember exactly which day it was. It's in the Discord because I was basically just posting Tesla. It was that day. I believe it was this day. But yeah, I was using Bookmap to help kind of navigate through this. This was solid. I can't remember the exact date, but yeah, I still use it. That's the point. Yeah, I hope that I don't leave now and then all of a sudden things crumble. That would be annoying. You know, you get in at the right time and then you come back and things fall. Okay, everybody, I got to hop off. I need to take a little bit break before I hop on a call. Hope you all had a good stream. Thanks for tuning in. See y'all on the next.